Good afternoon, everyone. Welcome to today's daily recap. I'm Laz, CEO of T3 Live, and I want to recap today's price action. I want to give you my 2 cents, sometimes even my 6 cents, on what the potential clues are and what may happen next. I started this morning pre-market looking at this big gap up from today, about 15, 16 handles. By the time we opened, and I suggested being very careful. I mentioned an overthrow, the concept of an overthrow of this broadening pattern, and I wanted to stress it again. And again, these are patterns are very subjective ways of looking at the market. What one person perceives as a pattern, another person, could potentially say, no, that's not what it is. But patterns measure psychology of the audience. And we have this concept of overthrow. An overthrow is when, stocks typically will jump out of a designated range or pattern only to then turn the other direction and jump back in. And I think the potential exists here very much like we saw, a few weeks ago in middle October for this market to, find some sort of, topping action in here and turn back down. And again, I say this based on experience more so than anything else because I've seen this before. Also take into consideration, how far we have come in such a short amount of time. So I don't think I'm going out on a limb by saying that. Now, did we find that top today? I don't know. I guess only time will tell. We could potentially, resume this further to the upside and then, jump back down. I think let's just give it another couple of sessions here before we can, clearly say that. If you remember, and again, sometimes traders have short-term memories. When we were down here, the world was coming to an end, and we were all, heading for the fallout shelter. And up here, again, the sentiment is, we can never, it will never go down. So just keep that in the back of your mind. And again, I got some tweets today. My cup's half empty. I don't view this as me saying my cup is half empty or the world's coming to an end or anything by that stretch. What I am is, I'm a trader. I evaluate objective price data. I look at patterns, and I think in terms of risk. Down here when the market was trading in the zone, I was not the one that said that you need to continue to look short the market. Just like up here, I'm not going to be the one to tell you I think that the market's going to continue higher and higher and higher, indefinitely, forever and ever and ever. I think that my approach is much more that of data driven and price driven, with the idea that as a trader, we do deal with anticipation and the ability to anticipate what could or should happen next, based on various criteria. In this instance, it's pattern, and pattern sometimes supports those turning points. So just to address all those that don't necessarily they think that I'm looking at this with some sort of slant or angle, I really am not. I'm really looking at it with the sake of what information can I provide you that will help you think in terms of where risk is the greatest or where risk is potentially the least, and then how you can then leverage that information into either capital preservation or capital gains. And that's, if I come across in any other way, then I think I'm not being understood. So that's my, that's what I want to say about, this whole concept of what I'm talking about an overthrow up here. I'm trying to, most traders will tell you what happened yesterday. I don't think that's a real way to talk to anybody. I'm more concerned with how I can help you, potentially either make money or save money by talking about what could potentially happen next and why. So I certainly am not trying to throw out this, uber bearish, the world's coming to an end argument. I'm just trying to say, look, this is what it is, and let's think in terms of risk. This is a very difficult pattern to trade, as I mentioned this morning, because it's made up of a series of lower lows. Again, the lows are lower than the previous lows, and the highs are previous than the higher highs. So you're making new highs, only to then turn, make new lows, and then turn and make new highs. So it's this very, very, it's almost a pattern of chaos in the sense that most traders like things, very nimble. What do I mean by nimble? Well, I just mean they like things very orderly. We go up, we consolidate, we go up, we consolidate, we go out, and that kind of price action. And that's really not what this pattern suggests. That's why I say it is a pattern of chaos, because when you look good, you turn and you make new lows. And when you look bad, you turn and you make new highs. And you get this really, it is a very, it's a volatile, emotionally driven marketplace. That's ultimately what this pattern, suggests to us, that we, the market, it's like I said, it's always buyers and sellers, and this is, like I said, a pattern of chaos. And I think you clearly understand why I say that, because the turns can be volatile and violent, and happen when you least expect them. So just keep that in the back of your mind. As we looked around today, at some of the indexes, we'll look at more ETFs than we will specific stocks. XLE, something I referenced this morning, gapping up this morning, and I referenced the weekly of the XLE, has this sort of bearish flag pattern, developing here. We did close the week, bullish, and due to today's gap up on the highs here, I think this might need a little more time. But this, to me, from a visual standpoint, suggests that this could lead to lower prices in due time. Again, my insights are more about what could happen rather than what did happen, because I think that's ultimately a waste of everybody's time. Let's take a look at the transports. Let me remove this. I think it's interesting to look at the transports, and again, here's the index. Here's the daily chart. Finding a little bit of resistance at prior highs here. You can see, gapping up into the prior highs and tailing down. Let's keep a watchful eye on this, general range up here. Let's see how this develops over the next coming days. And certainly, I would watch today's high as a specific reference point, as I think this had, the potential to go higher, but ultimately, kind of tailing down. So I'm gonna bracket this off, and I think everybody should keep an eye on the transports and how we handle this new upper area. Let's take a look at the XLF. Here's the financials. New highs today, and like most everything else, coming back down. So I'm going to kind of bracket this area off, and I think these are, healthy exercises. If you're looking for ideas, how do we handle these general zones? Because if we can't seem to, turn back up in a couple of days and break out of this to the upside, the potential exists in, somewhere. Should we break this lower boundary, that you have some you don't have a lot of support here to the left. We have the the ability to sort of easily come down back into, let's say, our first area of support would probably be somewhere in this general zone. There's not a whole heck of a lot of support until down around here. So that's why I want to highlight these things, because I am giving you some things to think about as we approach next week and even the following week. And the last thing I'm going to look at is the stocks, the semiconductors. Here's the index. And again, I'm showing you the index. The stocks we did see new highs today, clearly above these new highs, above, this general, zone there. So I would watch to see what kind of follow through we get here. A little extended in the short term. If the stocks can, if the semis can hold in there for a couple of days and consolidate or even pull back ever so slightly in this upper area, that could be the impetus for higher prices for, the NASDAQ at least, or some of those semiconductor companies. Take a look at the composite. Here's the NASDAQ, and it, with today's gap up, jumping up, much like all the other indexes, gapping up, and then kind of tailing down. Like I said, from a perspective of selling, a very controlled selling, in my opinion. Wasn't this bloodbath where it was just a complete disaster all day. It did, the market did kind of slowly, steadily decline for the better part of the session, to then kind of bounce around. And intraday, if you're more of an intraday, creature, I'd watch, into Monday, can we start to turn back up and build some strength, or does this, continue to maybe push lower? So I think, you can make the argument for both camps right now. Obviously, a lot of people out there looking for a larger decline, just given the nature of how high we've gone and the speed at which we've gotten there. So, good food for thought over the weekend. And I wanted to, put a few ideas out there, cover a couple of indexes and sectors. I spent, a couple of videos this week going over specific stocks. We talked about some of the momentum names. We talked about some of the what I thought was relative weakness out there, given the nature of the markets, especially in some of the tech, social media stocks, some of the more widely watched symbols. And if we look, even at some of those names today, the Twitters of the world, since we've had earnings, really dead money, not participating the way it was, kind of just in this, area here. And if it doesn't start to turn up, should we get through these lows, it could facilitate, more downside. On the social media side, Facebook obviously as well, which probably gets a lot of eyeballs. Again, gapping down, really no buying, stepping in. So to me, showing real relative weakness overall. Now these stocks can and will do whatever they want when they want, to some degree. But ultimately, should this market start to sell off or pull back, some of these names that haven't really seen any buyers step into them, could be, candidates for, a little more selling. So keep an eye on some of those names as well. Like I said, as we've sat at new highs the last couple of days, specifically this week, I haven't seen that many things, really with the momentum and impulse that we've seen in prior times. So my glass is not half empty, although I can understand where you might get that, as I'm not, I try to be more of a realist than an optimist or a pessimist, so that I personally I keep myself balanced that way. But look, that's what makes a market, right? So whereas Scott is maybe a little more optimistic than me, I can only be me and give you my own 2 cents. So with that, I hope everybody has a fantastic weekend. I'm optimistic you all have a fantastic weekend, and take care.